its monetary policy has thrown a lifeline of sorts to India's businesses and households by providing for the facility of a one-time restructuring. It now allows banks to restructure loans of individuals or companies or MSMEs who may have been hit by the COVID-19 pandemic. By the RBI's own estimates, that could be a vast number of people with the economy set to contract this year. So how will banks be taking it forward? And is there a niggling fear at the back of one's head that all of these loans, which will now be restructured, could possibly turn into a fresh lot of NPAs? Speaking to me now on the monetary policy and what it means for the economy and for the health of the banking system is Chairman of the State Bank of India, India's largest bank, Mr. Rajnish Kumar. Mr. Kumar, thank you so much for speaking with us. I have seen your comment on the RBI's monetary policy, and of course you welcomed it wholeheartedly. There are some who think that the restructuring plan, while excellent, it's a lifeline that everyone needs, comes with so many conditions, that it may be difficult to extend help to everyone that actually needs it. What is your comment on the kind of entry barriers that have been laid out through this policy?
No, the intent of the policy is very clear, and the policy is meant for those people who have been impacted by COVID-19, whether it is businesses or individuals or MSME. Already there was a framework of 7 June 2019 for resolution of the stressed assets. And this is a special window, particularly for corporates within this framework, which has been opened. It was expected that this will definitely come with certain safeguards. And it is fair that there are certain safeguards built in, and whoever needs it genuinely, they need to be supported. But this window cannot be used for restructuring or relief to those who are otherwise in deep trouble or needs a deeper restructuring. This takes into account certain sectors where there is a disruption in the cash flows, and what the enablement has been done, that when we sit down with any of the clients seeking restructuring, first test would be that the impact is on account of COVID-19, and second step would be assess the future cash flows, align the repayments, and there have been certain boundaries set, operate within those boundaries.
How will you assess? Do you see any challenges at all in assessing the impact of COVID-19 on these stressed accounts, whether they're companies or individuals? Do you think that the guidelines are clear enough, and will it be left to some amount of discretion?
No, that is the bank's job. That is what we day in, day out do. Even when we sanction any loan proposal, this is all about assessment of the future cash flows, and that is what determines the repayment capacity. So any appraisal or any credit decision, the one most important thing is about the assessing the credit worthiness, and the second is assessing the cash flows, and depending upon the capacity to pay, the quantum of the loan or the debt is determined. So this is an exercise which bankers do day in and day out. So it is not such a difficult exercise. And banks have been doing restructuring. It is not that is new. There are certain relaxations, as I have said, given in that framework. And otherwise, the infrastructure, the appraisal formats, all that is already in place.
Okay. Do you see a large appetite within this restructuring window from companies and individual borrowers? The last time we spoke, Mr. Kumar, we talked about moratorium, and you made an appeal that the moratorium period should not be now extended. I think that question perhaps is now become moot. But looking at the kind of dip we saw in appetite for moratorium, just as an assessment, as a ballpark, do you think that there will be a huge appetite for borrowers within this restructuring window?
No, there's no question of any appetite. It is all about the need. And there will be certain sectors, and within those sectors, certain companies who will need it. So it is about the need and not about the appetite.
So how extensive is the need? Is there any internal assessment that you can share with us?
No, we are doing that assessment because guidelines have been issued only yesterday, and already our teams, they have been put on the job. And in any case, based on the repayment track record so far in these last 4 months, we know what are the sectors which are impacted. Within those sectors, who is looking for relief under the latest guidelines of RBI, and there may be still many clients within those sectors who will be able to manage and start paying from September anyway. So that assessment we would be able to do in next 10 days.
So is there a sort of a ballpark percentage of accounts that you think will have to be examined for possible restructuring?
No ballpark figure, no estimates as of now, but going by the performance of the loan book, which we have seen in the last 4 months, I don't think that a very widespread restructuring is required. And as I said, that we have to now assess the situation. We have to talk to some of the clients who have taken the benefit of the moratorium, and then discuss with them that what are their plans from September onwards.
Okay. Speaking about the policy, there is one directive to increase the value of loan for gold. And a lot of reactions have come into this from a lot of quarters. Some saying that this could be a bit risky because gold prices are very inflated right now. I just wanted to get your view on this subject. Do you think that this will be something that bankers will not be very excited about, to give 90% of the value of gold when gold is trading at such high levels and we don't know where it will go next?
So RBI has given you an enabler, and depending upon the risk appetite of the bank, their capability to monitor the portfolio, and as I said that currently the prices are high, and at this point of time, to which segment of customers you would like as a bank to extend up to 90%, that is a policy decision which banks can take. RBI has, as I said, that they have given an enabler, but rather than being completely, say, unsecured, even at 90%, even if there is an element of risk, but that risk is much less than any other form of lending, and it would definitely need the capability to monitor the movement of the prices of the gold, and with suitable covenants that at all times that 10% margin is maintained, and that is where the risk assessment will have to be done. So I think it is an enabler given by RBI. It is up to the bank what policy do they frame and how do they manage their risk.
For you, do you think that it is an interesting proposition? Is there a demand in this space that you are saying? Would you want to go for it?
No, we have created a very simplified process on our digital lending platform to apply for gold loan, whether it is agriculture or P segment or for SME. And agri's segment, every day we were sanctioning 15 to 20,000 loans. But even for personal segment and MSME segment, we are seeing a very good demand, but currently we give only up to 75%.
So will you be agreeable to increasing this to 90%?
We will decide our risk management department, and they will come out with a policy and with what safeguards we extend this facility and to whom. So we will have a look at our gold loan policy.
Okay. Okay, let me turn to larger systemic sort of issues. With the one-time restructuring coming in at a time which is definitely needed, safeguards have been put in place, etc. Do you think that there is a valid question of what happens 1 year down the line as more and more accounts possibly go into restructuring? Do you think that we are going to be faced with a situation where we have kicked the can further down the road on the NPA issue in the banking system and for SBI as well?
No, I think it is like if RBI had said that we don't give no such window is available, then there is a problem. If RBI has given an enabler, so there is a problem. I don't think the system works like that. There is no question of kicking any problem down the road. And with great difficulty, after 3 years of consistent cleanup of the balance sheet, I don't think banks are going to again land themselves into the same problem. So, and RBI, because in the policy itself, there are sufficient safeguards built in to avoid repetition of the mistakes. And on the borrower side as well as on the lender's side, everybody is sufficiently aware that there is no point in postponing the problem. And it has to be a bold driven policy, and it will be driven by the consideration that only such amount of debt is given which is sustainable. In any case, even now, again I am repeating that the existing framework also, the unsustainable debt, it is carved out and provided for upfront. And the same is going to happen. And that is what has been provided in yesterday's policy. Only on sustainable debt, there are two reliefs. One is that sustainable debt, to treat it as a standard. The earlier dispensation was that there has to be a change of promoter. At least 26% new promoters should come in. So that relaxation has come because in current circumstances and when even for the existing promoters, the situation is not because of any sort of mismanagement on their part. It is the macroeconomic unforeseen circumstances. So that is the relaxation. Second is the relaxation around asset classification. So instead of making it substandard, you make it standard even with the existing promoter. And instead of 15%, the provision requirement on the sustainable debt is 10%. So other than that, it remains whatever the dispensation was there.
Yeah. That's in the context of these particular safeguards and this particular one-time restructuring. But let me broaden the ambit of the question, Mr. Kumar, and get your sense systemically on the issue of NPAs. I mean, a resolution process has been kicked off over the last few years. The IBC was working, its way through the system. Banks have been increasing provisioning, etc. And then the coronavirus pandemic has hit. Do you think it has postponed the entire process of undoing the tangle of NPAs, enmeshing the system?
No, not at all. And whatever way you look at it, ultimately, uh, every bank would be looking at that what is their NPL level and what is their restructured book. And that is how it has to be viewed. Worldwide and globally, there is a recognition that because of the circumstances beyond the control of the promoters, if we don't support the business and just say everything is NPA and declare everything NPA, that would be counterproductive. It does not mean that you compromise on the prudence. Both the things have to be very clearly distinguished. Helping the businesses out or helping the individual out who have been impacted for, I would say, no fault of theirs. So in such circumstances, if we take a very hard view, that will be not good for the economy, that will be not good for the banks. But nowhere the intent is that you compromise on the banking prudence.
I just want to get a sense from you, sir, about the credit offtake in the system. There has been a series of rate cuts. Transmission has been better than what we usually see. This is something that the governor has said as well. Liquidity has been created in the system. Yet credit offtake has not been as good as would have been expected. What are the reasons for this, and do you agree that this is a situation right now that we are facing?
No, the reasons are obvious that there was disruption, April, May, virtual halt to the economic activity. June onwards only the economic activity has come back, not fully, but is still 70 to 80%. And as the capacity utilization improves and as the investment activity in the economy improves, there will be a growth in credit. But April, May was just almost a washout for everyone.
Just a word from you as we wrap up this interview, Mr. Kumar, on the overall economic outlook. I think the governor did not mince his words, saying that there is a lot of negativity still out there, though we have to be optimistic. We're going to see a contraction in growth. The estimates range from 6 to 10 to 12% on how much the GDP will contract. Do you think that we are in a position to revive and survive faster than other economies, and we are putting in place a system where we can come out of this in a robust way?
So I think a very concerted effort is going on, I would say, both from the government side, the Reserve Bank of India. They have been responding to the situation and coming out with the policies which are required to revive the growth. And ultimately, it will be the collective effort of everyone, whether it is banking system or the individuals or the corporates, and of course supported by the government and RBI. And of course, everybody wishes that we overcome this problem of COVID-19 as soon as possible. So there are multiple factors. Of course, the scenario still remains a bit uncertain, but the effort is very much there on all fronts, and we can hope that we are able to recover both on the health front and as well as the economy's health front as quickly as possible.
Well, thank you so much, Rajnish Kumar, for speaking
Thank
with us
you.
today.